Thank you, Jessica. That's very nice of you, and thanks for the opportunity to be here. We always appreciate it. Um, I'm in the conference business now. In the last couple of years, Jessica's been doing this a long time, and I consider this to be the number one U.S. mining conference, not mine. So she does a tremendous job with Misha and her staff. Um, First, I wanted to talk a little bit about the Fennec Commodities Report. Don, sorry, I made some notes. We've interviewed some CEOs since last year, and this year it's really picked up because of the environment we're in. A couple of these names, Norsemont, NRRSF, we interviewed them at 32 cents. They're trading at 61 cents now. Paramount Gold, PZG. Rachel tried to be here. She couldn't make it, but she is going to be in Zurich. 66 cents. Remember that day they got bombed out, and now they're at $1.06. Scotty, SCTSF, 67 cents, and now at $1.33. Part of that is because they put out great drill results yesterday. And we've had a lot of stocks have record volume after our interviews. Quest Corp, QQCMF just last week, and Lahontan Gold, who we're having lunch with in a couple hours, LGCXF, to name just a few. Don, this is an environment where things are really moving. And what's your advice to CEOs out there in terms of getting their message out and that kind of thing?
Yeah, I had dinner last night with Hugh, the CEO of Revival. He actually asked me the same question, and I told him, the most important thing is for the CEO to get in the public and tell the story. So to come to these events, do more podcasts, get online. And the second thing I told him is the company presentation. It needs to be really strong. As an analyst, I mean, that's one of the first things that I look at. I go and I look at that company presentation. It really tells me the face of what they're doing. And I think those are kind of the two most important things for marketing.
Yeah, I agree. There's a lot of websites out there that need help right now in our sector. The fact sheet, the presentation deck, this is your first opportunity to get in front of an investor sometimes. So let's jump into kind of the checklist that you and I use. We talk about this frequently on our show about what both of us find important in doing due diligence on companies. So the first one for me is people. This is a people business like any other sector, right? You're going to have good, bad, and ugly in any sector. But the job of sifting through that group of people to get to people you can trust is a lot of work. I'll give you some examples. I wrote these down so I don't misspeak. Someone in the business that we're in contacted me not once, but 4 times just a few months ago to run a conference in his local market. And this person has since been the recipient of many large wires from mining companies to pay for the event, which we can substantiate in writing, yet hasn't paid us in full for the hundreds of hours that we put in to do the work for that conference. And then the person sent us a letter saying, accept this settlement offer or we're going to face legal consequences, us, for doing all the work. So therefore, we're in the process of exploring all legal options in this matter at the moment. Another mining exec from a potash company approached me for consulting work last year. I do a lot of consulting work for people in the commodity space. I gave them a discount on our monthly fee because they signed a long-term contract. And we worked really hard for them, and then they canceled our contract, which is fine. They paused a lot of their marketing. That's normal. We sent our final invoices, and then months later, as we sit here now, none of them have been paid. Yet during the time we worked for them, the stock went up roughly 65%. So as a leader of 4 mining conferences next year, and as an advisor to 3 more like this, what's my incentive to put my clients in front of people like this? It all starts with people. So for us, that's our first screen. The second screen we have is the project. Projects vary, right? We look for grade, we look for how many ounces in the ground. We have a number of different criteria we look at for the Fennec Metals and Mining portfolio. The third is share structure. And it's a close second to project, honestly, because I see a lot of decent looking stocks out there, but then you look at the share structure and it's completely blown out. And Don and I talk about this regularly on our show. We want to have at least 30% of the share structure in good hands. What does good hands mean? It means management, insiders, funds, financial advisors that I might know that own 2 to 5% of the company that have no intention of selling at rock bottom prices, people like Don and I that don't have intention of selling at these prices, right? And you add all of that up, and then you can get a better confidence level to make sure that you're not going to get taken under. What's a take under? Well, Marathon Gold. I was here in Zurich actually in November of 2023. I remember being asked that question, and I was like, yeah, that was a really weird one, right? Because it's like a newsletter favorite, but they didn't do the right thing for shareholders, in my opinion. And so we have to look at share structure very, very closely, and that's one of the things that we do. And lastly, it's jurisdiction. Don't know, I may have you guys have kids out there, but I have one little amazing girl, and her side of her family, her mom's side, quite liberal. So we're sitting there last summer watching the Biden-Trump thing, and about 2 minutes into it, she turns to me with no political background or knowledge whatsoever and says, "Dad, Biden's cooked." I said, yeah, okay. The next day, on that Monday, I just went all in the U.S. That whole week, we just piled into U.S. mining stocks because I thought that no one really could beat Trump after that. That's been a really good help to our portfolio performance since then, because Trump obviously came out with his March 2025 EO talking about his support of U.S. mining companies. That was followed up in April with some more support. You saw just August 13th, a few weeks ago, he said, we're going to have, here's $1 billion for critical mineral support. That's just the beginning, guys. Like, this is just the beginning. There's no way $1 billion, even though that sounds like a lot of money, solves the problem. We're way behind China in critical minerals. So another way that Don and I differ is that Don is focused very closely on gold and silver related. I'm all over the map. I'm copper, critical minerals, etc. So we come to this event with different backgrounds, but we, get along and we see the world very similar sometimes. So, Don, with that, I'm going to turn it over to you to go through some of your checklist.
So I started in 2004. Didn't know what I was doing. I was a rookie, and it took me at least 2 years to learn how to do it, to analyze a stock. And I kind of went all in on gold and silver mining stocks from 2004 till now. I mean, that's been my focus 100%. And I'm type A personality, so I basically learned how to do it, became an expert in analyzing mining stocks, and then wrote my own book because I couldn't find one. There literally was 0 books on how to analyze junior mining stocks. And the last chapter of my book, chapter 10, it has a 10-point checklist on how to analyze a stock. And that's from all my years of learning, and those 10 points, somebody took that chapter and fed it into AI, and to this day, it created an agent, and it works fantastic. It's unbelievable. They just taught AI how to use my 10 steps. And for me, they're all important. And so what you need to do when you analyze these stocks, you have to you can't learn this in 6 months. It really takes some time. You have to do some reading, a lot of research. But you have to, because each of those 10 steps in that chapter 10, each one takes a little bit of time to learn and understand. For instance, he mentions jurisdiction, location, but what's the difference between Mexico and, say, Ecuador? Learning the difference between each country takes time. You don't learn that overnight. So learning, which company has a good location, which one has high risk, you're not going to learn that instantly, if you will. So each little step is going to take some effort on your part to kind of understand. And then he mentioned people, management teams. That's another one that it takes time to really understand which teams are elite and which ones aren't. And now I can actually put each management team in a box. This company, you tell me a company, and I'll tell you they're in this box, this box, this box, because of all my experience. And the one thing that I like on management teams, now on my checklist, every point is important. And what I say in chapter 10 is what you're trying to identify is the red flags. So each of the 10 steps, you're going to find red flags in each one. And you're trying to find a company that has not enough red flags to kind of say yes or no, kind of, am I going to invest, am I not? And you have to decide how much risk you're going to take. Sometimes you take a little bit more than you want to. You gamble on a few. And what I do is I take my allocations down if I think it has high risk. And then the less risk, I'm going to put my allocations up. But back to the management teams, the one thing that I really like, I call them buy and build companies. And I love to own these. If you can get a company cheap, if you can get in early on a buy and build, those are the best companies to own. Now, what I mean by buy and build, that's a company that can go and buy a project and build it, and you're confident they're going to build it right, and they're not going to have any problem. Good examples like G Mining. G Mining, they're on their third mine already. And after they build those 3 mines, they're going to look around, okay, now what? We're going to go build another one. Another one is Orla Mining. And these are companies, the first time that I looked at them, the first time I did an analysis, and remember I mentioned the company presentation is important. I can look at a company presentation and just know that this company knows what they're doing. And that's, over time, you get this feeling. And sometimes I'll look at a presentation and it'll have like 12 slides. In other companies, there'll be development companies like 50 slides. And it's like, and the ones that have 12 is like, what do you do? 12 slides? I can understand your company in 12 slides. There's no way. And that's the face of the company. And you get, so those company presentations will really give you insight. And if you get a bad feeling, 80% of the time, it's probably not going to work. And so you got to get, so when you're doing your due diligence, as far as people goes, you can get a good feeling on people on the company presentation. The other one is CEOs. CEOs are very important, very important. They make a lot of decisions that kind of make or break a company. So you can watch the podcast of the CEO, kind of get a feeling, come here, talk to the CEOs. I get really excited about buy and build companies, and then I get really excited about companies that have good CEOs that are development. I mentioned Hugh earlier, Revival Gold. Glenn Jessam of Silver Tiger. These are guys that they basically know what they want to do, and they have a plan to achieve it. And all they're doing is just going through the steps to achieve those goals. But the key here is they have an end result. It's like, this is what we're going to achieve. This is how we're going to achieve it. And in this business, it's amazing how many companies, like we interview, John and I, we do the Feneck Commodity Report, and we interview these CEOs. And one of the questions I ask all the time is, what's your plan for the next 3 years? And it's amazing how often these guys do not have, they can go 1 year is about as far as they can go. It's like, come on. Or they have a hard time really eloquently telling you what they're going to do for the next 3 years. But if you ask Hugh or you ask Glenn, they can tell you very eloquently because they know. And so that's what you want to look for. It's the little things that matter, and the more confidence you go. But for me, I'll give one quick story. I don't know how much time. We've got 33 minutes. One quick story. So sometimes you gamble, you take risk, but you don't take high allocations, and you get lucky. There's a lot of luck in this business. But so I bought a company called Crocodile Gold back in 2005. It was a mid-tier producer in Australia. I liked Australia. I liked their properties. I liked their potential, but the management wasn't very good. So I was like gambling on management, but I like Australia. I liked them. So I gambled. The stock did nothing. It was kind of just sitting there. Then company came and took it over, Newmarket. And I thought, okay, maybe they're going to find something and drill it. Then Kirkland Lake came in and took it over. And then Kirkland Lake went and they found Fosterville. It was just sitting there. And so the first 2 companies, because the management team wasn't good, they had one of the best mines in the world. And Kirkland Lake went, how come you didn't drill over here? And boom, they found it. And that turned into a big winner. And that's kind of where the luck goes. So sometimes you just have potential winners, and the potential winners turn into big winners. And you don't know what the winners are going to be. And that's a big takeaway for me. And so I always, I like to try to find a lot of buy and builds cheap, but they're not easy to find cheap. But now they have been. There's still a lot of them that are out there. I need to do a tweet, my favorite buy and builds companies, and let you guys know. There are some cheap ones out there. Dundee, SSR Mining, Perseus, And some of these companies are becoming buy and builds. I think Artemis Gold might become one. We'll see what they build. They did a great job on Blackwater. But buy and build companies are aggressive. They build one mine, they go build another one. I'll stop there.
Thanks, Don. Great insights. Just to piggyback on that for a second, the interaction with CEOs for us is extremely important. I'm old school. I pick up the phone and call people. I called 15 CEOs just last week. You get a lot of information from a CEO. Like when you get a technical release, right? The clients are going to ask questions because none of us are geologists. And I want to get to the bottom of like how meaningful that press release is to their future, right? And so doing that via phone for both Don and I has been a huge help to both of our businesses. And if you're not able to do that, if you don't have the time given your profession, you have to hire people like Don and I to do this work. I mean, this is a tough sector. There's a lot going on at all times, and it's a high risk sector, right? Just to give you some perspective of how small this sector is, all of the companies that are attending this, plus others added up, don't even equal 0.5% of the overall market. Conversely, the S&P, which is SPY on an ETF basis, SPY has 45.41% technology as of August 31st. So we are a speck out there as an industry. And having people like Don and I on your side really helps because we're doing the work. I worked 70 hours last week. I worked 20 hours this weekend. I'm putting the work in because this is the time you go for it. And many people don't understand that, right? Many people are saying, oh, we're in the 8th or 9th inning. No, we're not. The producers have run. Some of the mid-tiers have run. The juniors have not run. Many of them are attending Jessica and Misha's conference here, and they're great. They're greatly positioned as we speak right now. You just have to do your due diligence, and we can help. Don, let's go talk a little bit about macro because we don't have too much time. So, obviously we saw non-farm payrolls just come in at a ridiculously low 22,000 jobs just last Friday. Gold, silver, GDX, GDXJ all responded favorably to that. We've seen follow through the last 2 days. What's your take on the economy right now?
So first of all, I firmly believe that if you're going to invest in gold and silver mining stocks, that you have to believe in the price of gold and silver going higher. I mean, that's because it's a very unusual business. The value of these companies is literally predicated on the price of gold and silver, which creates the margins. And so if the price of gold and silver is so important, you really need to pay attention to what drives the price of gold and silver, which is the macro situation. Now, I think it's really the reason why I got into this is because I always believed that the U.S. economic system was basically a recipe for disaster. And that's what we're kind of seeing right now. What I mean by a recipe for disaster is we're trying to economically, if you do any type of economic analysis or education or whatever, is that we're trying to use debt to create growth. And that is it's not the best way to do things. It's like a business. For instance, since 2000, the average growth in our debt is 8% a year. That's what the average is for 24 years, 8% annual growth in the national debt, whereas GDP is 4%. So we're growing debt at twice the level. And that's the reason why we have a $37 trillion deficit and we're adding $1 trillion is because we keep expanding our debt every single year. And so the reason, and that works fine until you have inflation. You can expand debt as long as debt is affordable. So from 2008 until 2020, we had these low interest rates because we had low inflation, so debt wasn't an issue. But simultaneously, that debt kept getting bigger and bigger and bigger. And now, once inflation shows up, no longer can the economy basically afford that. We can no longer make those payments. So what happens is the bond market, the U.S. bond market, starts to become fragile. Now, I anticipated this years in advance. In other words, what's happening today is what I expected. The reason why I got into gold and silver mining stocks is exactly what's happening today. It's basically my thesis. I didn't get into gold and silver mining stocks to invest in them. I got in them to speculate. And for me, it's a once-in-a-lifetime trade. I plan to sell I've been collecting mining stocks since 2004. I have about 165 now. I've been collecting them, waiting for this outcome. And now the outcome is here. And it's ironic. It actually started in August. Everybody could see it. In August, we had this tone change where the miners all of a sudden started getting a bid, and you could feel it. And John and I could tell something changed here in August. And then what happened at Jackson Hole when Powell said that he's going to pivot, we're going to change our strategy from fighting inflation to supporting the economy. When he did that, that's the reason why gold's up $150 was his Jackson Hole speech. Because you cannot fight inflation and the economy at the same time. It's impossible. You can only do one or the other. But the problem is that if you give up on inflation, which he's doing, and he's going to try to fix the economy, and I've always expected this to happen, is that you get into a doom loop where there's no good choices. And what the doom loop is that in order to fight the economy, is you have to start doing quantitative easing, which creates more inflation. So Powell's going to have to spend money, but he really doesn't have a choice here. If you go back and look at 2008, we had no inflation, very little inflation, and the debt level wasn't nearly as high as it is. And the budget, and here's another one that's really important, is the government's federal budget wasn't nearly the size it is today. So these problems are all magnifying. And then on top of that, we have an economy that's basically been in growth since 2008, so we're overdue. Our stock market's valued at $63 trillion, which is 2 times GDP. It's historical levels. His price to book value is 5. Historically, it's about 2. It's out of control. Price to sales is at 3. It should be at 1.5. So the stock market is in a bubble, a massive bubble. Simultaneously, so we have all these problems that are all coming at the same time. And so gold is really the only place to run. And the reason why it's the only place to run, Bitcoin would be another one, is because historically, investors have ran to U.S. treasuries or run to fiat. I'll just go to cash. Buffett went to cash, $350 billion. I'm going to go hide in cash. Well, guess what's going to happen? You're not going to be able to hide in cash. You're not going to be able to hide in bonds. And the only place you're going to be able to hide is in Bitcoin and gold. I say the only 4 assets that are left is Bitcoin, Ethereum, gold, and silver. But you got to own those 4 because in the next 2 years. And so gold, and I've said this, the only place gold's going is higher. I think 5,000 is easy. And I'll end here. Any corrections that we have in gold and silver will be short-lived. Gold and silver are now the buy-the-dip assets. For the last 15 years, the buy-the-dip asset was the S&P 500. No more. Now the buy-the-dip is gold and silver and probably Bitcoin.
Thanks, Don. So Don was referencing, he and I were talking August 1st when that non-farm payroll number missed for the first time. And we were saying, wow, we're seeing some different action in the market today. And that was, for us, the beginning of things. August 22nd was the speech from Powell at Jackson Hole that he was referencing. If you want to take a look at our sector and how it performed then, that was another aha moment for you. What we do at the Feneck, Commodities Group and the Feneck Consulting Group is we have a real-time email service updating clients, some of which you guys are here, on this stuff as it happens, right? So when that non-farm payroll number comes out, within 2 minutes in your inbox, you have my personal take on what was that number, how is it meaningful to gold and silver and GDX and GDXJ, and how is it also relevant to the broad market, because I truly believe most clients have the majority of their money, unfortunately, in the broad market, right? So I want to try to give them some insights. And we do this with CPI, we do this with GDP, because Powell has said over and over again, we're going to be data dependent. You have to know the data. This is a puzzle we're putting together, right? So August 1st, big non-farm miss, but the relevant thing there was the revisions on the previous 2 months. Ridiculous. It wiped away 258,000 jobs. That's serious. And so for us, that was like a wake-up call for if you're not invested, you got to get invested. That was followed up by the Fed, talking at Jackson Hole on August 22nd. And then we just saw the non-farm miss on September 5. Watch CPI this week, and you've got the Fed on September 17th. I personally feel the September 17th Fed meeting is going to be the biggest in many, many months, because Powell's shown his hand now, right? Powell has said August 22nd, we're going to be more dovish and more accommodative. Let's see, because how the market interprets that is huge. You know, when you look at the S&P and the NASDAQ, I remind my clients all the time, guys, look at your statements from March of 09 to today. Some of that is you, some of that is luck. I would argue a lot of it's luck, and you have to be careful and take some of that money off the table and then reinvest it in something that can hedge your portfolio like our sector. So Don, go ahead.
Yeah, as gold and silver investors, the one thing that you want to do is you want to be confident that the reason why you're buying the mining stocks is because gold and silver prices are going higher. And the ultimate reason to be confident right now is the state of the U.S. economy. Not the global economy. The U.S. economy is 23, 24% of GDP. And the U.S. dollar is the reserve currency. And the BRICS have basically been aligning. And the BRICS are like trying to figure a way out to get away from the dollar because the dollar is inflationary and it's hurting their currencies, hurting their economies. And they're like, how do we figure this out? But they will figure it out. They will move away from the dollar. They will move away from the treasuries. So the whole dynamic of the U.S. economy, the U.S. financial system, they've been at risk for many years, and now it's become very obvious that we have approached the end game. And I've always known the end game was coming. That's why I just keep collecting these miners. It's like there's nothing we can do to prevent this end game. Everybody's talking, well, we can just kick the can. But now we've reached, we've seen Trump try to use tariffs. Tariffs are not a good thing. Tariffs are an act of desperation. We would prefer to use free trade. Free trade helps our corporations. It doesn't help them. But we have to use it to basically fill a hole in the budget because the bond market is starting to become fragile. So he's raising about $300 billion. That $300 billion is kind of necessary to kind of keep the bond market stable. But the problem here is once the recession begins, and I have no doubt it's going to happen, once that recession begins, everything's going to start breaking down, if you will. And so what I've been waiting for is the last shoe to drop. The last shoe to drop is the market. So I've been saying this. A lot of people on Twitter always tell me that I'm way too bearish, and I call myself the most bearish bull. And everybody, when are you going to go long? When are you going to get bullish? And I'm always talking about corrections, but I turned in August. I basically turned and said, you got to get on the train. And the train is that you got to have a portfolio in stocks because now the bull market is definitely happening here with the miners, with the HUI, and that any corrections now are going to be short-lived. And so you can't really stay off the train. You got to be on the train now. But as bullish as I become about being on the train, simultaneous to that, I'm not super excited because the ducks aren't all in a row quite yet. And the last duck is going to be the S&P 500 to stop going higher. So you have $63 trillion in the stock market, and Wall Street really isn't really that interested in mining stocks. And the reason why they're not interested in mining stocks is they've been making money on Wall Street. And normally, Wall Street doesn't like to buy mining stocks because it's speculative. It's speculative investing. Who wants to do speculative investing? They want to invest for PEs, the NVIDIAs of the world. And so what I've been waiting for is kind of what happened from 2000 to 2007 and then 2008 to 2011. And what happened then was the stock market was having problems. The stock market was very flat. So coming out of 2000, we had the dot-com bubble burst, and then you had 9/11 in 2001. Those two events caused the stock market to have a lot of trouble from 2002 to 2007. That's when gold went from $250 and it ripped. In 2007, I don't know if it was 800, 900, but it was ripping higher and the market was not. And that's kind of what's happening today. And so what we need, the only time that the miners really do well, and that's what we want them to do really well, was the 1970s, which we had financial crisis with inflation, and energy shocks, and then we had the 2000s. And so now we're getting ready for that to come back. So that's the last duck. So we have the gold and silver bull market. We have the HUI bull market. The last thing we need is the S&P to stop going higher. Once that happens, money will rotate out of that $63 trillion. That's just the U.S. stock market. The gold and silver miners is global. So it's all the global money. And so then the money will start flowing into the miners. So we're very early. I think the HUI is going to go somewhere between 1,500 and 2,000, and I think 1,500 is actually very conservative. I think $5,000 gold is definitely doable. I think we're going to go north of that. $100 silver, I think we'll go north of it. And so right now, now's the time to load up and look for. And we're going to talk about a little bit about stocks. Now's the time to get on the train, and know that any correction. Now, I could be wrong here. Any correction in a bull market is usually short-lived. And so if it's a short-lived correction, I mean, yeah, you might catch a falling knife. Your stock might go down 10, 20, 30%, but it'll probably come roaring back. I mean, that's usually what happens in bull markets. So I'm not really worried about a deep correction in gold. I don't think it'll go below 3,000. My target is 3,100 to 3,150. I think that's kind of the floor we're going to see here with gold, but I don't think it'll last long. Silver, maybe 34, 35. I don't think we'll go to 33. So any corrections now, I think, will be short-lived, but we will have them. There's always going to be corrections in gold and silver. That always happened. 2004 to 2011, every year there was a 10% correction. So you can, in the miners, like the HUI, you can expect corrections every year.
Yeah. So in August, once we saw that economic data we just talked about being produced, we went to our clients and we said, look, you've got a path here until tax loss season. To your point, there's always an opportunity to buy our sector more cheaply. For us, that's tax loss season. I'm different than most people in our sector. Most PMs, most newsletter writers are always saying in recent years, there's not going to be tax loss pressure this year. They're always wrong. There's always pressure because you have rookie traders out there that don't know what to do when they're handed an order. This just happened when we interviewed Rachel Goldman from Paramount, right? We saw a 200,000 share block hit the tape. Stock went from 71 to 67 in one trade. This is a bull market. This just happened last month. So you're always going to get opportunities. That's why we coach our clients to buy 2 orders, right? Set limit orders close to the action, so you might get filled in that scenario, but then set one away from the action, maybe at 64, 65, 66, so you can get what we call a stink bid filled. So that's the kind of stuff that we talk to our clients about all the time. So I personally feel that you will get a pullback in November, December. That generally starts around November 15th and goes right through the end of the year. So we're going to be buying hand over fist because seasonally, gold and silver stocks do quite well in Q1. Don, let's talk a little bit about GDX and J and then some individual stocks. So GDX coming in here, when you look back at the 2010-11 charts, topped around 67 bucks. We're pushing on that as we speak and record this right now. I think we're at 65 or 66. So very exciting for people that have been able to hold GDX. It obviously bottomed if you look at the chart in September of 2022 and has been just a really nice series of higher lows ever since then. GDXJ is kind of weird because when you look back at the 2010 and 2011 charts, the high back then was in the 170s, and we're trading in the 80s right now. So when people question us about this market, this run being over, we're like, well, look at this chart. There's still plenty of upside here in our market. And when I look at the junior market, I'm even more excited. So let me talk first about a couple of ideas out there. I don't think anyone would disagree that we've got some issues in the United States with our relationship with China right now. When you look at how China produces tungsten, for example, a critical mineral used in military applications, technology, etc., they produce 81% of the world's tungsten right now. Guess how much we produced last year? 0. And guess how much we're going to produce this year? 0. Guess what? As of January 1st, China's not exporting tungsten anymore to the U.S. We found this out in November of 2023, and we went all in on a stock called Guardian Metal, which is GMTLF in the States, GMET.L in London, no Canadian ticker. Young CEO, very aggressive, was in Nevada with a London-based company trying to get on the OTC because his fiance at the time was living in London, and he's a Canadian guy. So I was like, okay, tell me the story and what's your path, right? And he said, we want to get a second project in Nevada, and we want to become the biggest U.S. tungsten play out there because we feel that the DoD, the DOE are going to start writing checks. Well, guess what? Guardian Metal just got a check. $6.2 million. I know that doesn't sound like a lot, right? But on the back of that, they also got a $21 million financing done in one day. Guess who came into that financing? Billionaire Stan Druckenmiller. He now owns 15% of that company. This was on no one's radar when we started this company in our portfolio. We now have a 7% position in this. In full disclosure, this is our largest equity holding because I believe tungsten is a critical mineral. And if we ever go to war in a real war application, not just supporting other wars, we're going to need this, right? We're going to need antimony. We're going to need all these things. If you look at, Mandalay's here. We're meeting with Alkane tomorrow, who just merged with Mandalay. They're the #1 North American producer of antimony. They don't talk about it too much, but that's meaningful. And their stock is starting to respond, right? So it's not too early in some of these names. Another tungsten play, I see John Anderson's here. Triumph Gold is sort of a backdoor tungsten play for us. Why? John did a great job of not going out there and marketing the company in bad years like 2022, 2023, even 2024 to kind of put the pedal to the metal right now when we have higher gold prices and higher tungsten prices, right? He's got 15 million pounds roughly of tungsten in his Yukon project. You can see what's happening this year with Victoria, right? It kind of gave the Yukon somewhat of a black eye. That's not really fair when you look at all stocks because this project is a couple hundred miles away. It doesn't even matter to us. What matters to us is that when you look at the share structure, John himself owns 10% of the company. Michael Gentile owns 8% of the company. You start going down the list and you're like, man, these guys aren't selling. They're wealthy guys. They don't need to sell at rock bottom prices. So then John acquires a Utah silver company, project this year. And that got us even more interested, right? So now you can pivot away from gold and tungsten if you need to and move into silver. So, there's just a couple of names right there in critical, and I'll give you one more. Stillwater Critical, which is PGEZF in the States and PGE in Canada, run by Mike Rowley. I've known Mike for 3 or 4 years. I did, again, a CEO cold call, had no relationship with him. I said, hey, I want to get a better understanding of your project because you're connected to a major named Sibanye. I own Sibanye. Why the heck are you guys priced at 8 cents, and that's how it started. And now he's at 22 cents. He, I believe, is in line for a DOD check as well because I introduced him to a lot of, personally introduced him in April of last year to a bunch of politicians in D.C. And now he's formed great relationships with his state in Montana. And his rocks are literally connected to Sibanye's. This isn't like 10 miles away closeology. This is, you're connected to a major deposit, right? So as we move forward, these are the kind of things that I think people need to pay attention to more. We create a lot of alpha in our portfolio through exposure to critical minerals. So Don, I've given a couple of critical minerals ideas. Why don't I turn it over to you for some gold and silver?
Okay. We have 8 minutes left. So we're talking stocks and which ones to buy, I guess. So if you're a conservative investor and right now, I think we're in a bull market. So if gold's trending to 4,500 to 5,000, the royalty plays and the ETFs is really the easy bucket, the easy way to get a 3-bagger. GDXJ is up 100% for the year. When you get 100% in an ETF, SILJ is even better, even up more, over 100%. I think of 100. I'm not sure of the number, but there's only like 3 silver ETFs. You got SILs, SILJ, SLVR. There's not that many. There's about 6 gold miner ETFs, but you can just buy the ETFs, buy the quality royalty plays, and get your 3-bagger low risk. So you can do that. Now, I want to chase alpha. And so for me, chasing alpha, first place I want to look for alpha is in these highly elastic stocks. And what I mean by elastic is they move for the gold price, the gold and silver price. And so for me, the starting place is producers. I always thought I'm going to make 80% of my money in producers because producers can grow through the price of gold. Also, as their balance sheet gets better, they get multiple expansion. Plus, they can advance their own projects through exploration development. Plus, they can do acquisitions. So producers, they have a lot of flexibility on growing the company. In growth, I've learned that the best way to make money in mining companies is to buy a small company and turn it into a very big company. And so that's what I'm always looking for. And producers are usually the way to do it. So that's for me is that's my starting point. I'm always looking for cheap producers. And today, right now, they're still cheap. I create a list called the Mormons. Everybody knows Don and the Mormons. The reason why they're Mormons is because normally you don't want to marry a stock. But in this case, you can marry all of them. So you want to marry the Mormons. They're all the pretty girls. And it was the 8 prettiest silver miners. And that's up. Since I created the Mormon list, that thing's up almost 200%. And all of them are still cheap. They're all 5-baggers except Fresnillo. But I think even Fresnillo will be a 5-bagger here. So you can start there. And then I created a list called the Aussie 8. And I expanded to the Aussie 10. And the reason why, first of all, I like the silver miners, there's very few of them. There's only like 15 that have a market cap over $100 million. It's a small little club. And then the Aussies, I just think that when this thing starts running, when we start to get more interested in the mining stocks, people are going to look around and go, okay, which ones do I buy? And they're going to go, well, I want to buy the ones in good locations. Well, where's that? Well, there's the US, there's Canada, and there's Australia. Well, try to find a mid-tier producer in Canada that only mines in Canada. You got Artemis Gold, you got West Red Lake. They're very few. There's not that many. There's a whole bunch in Australia. There's like 15 mid-tiers in Australia. Lots of opportunity. I love that. I mean, so there's tons of opportunity there. And the location. Western Australia, I think, is probably the best place to mine in the world. It's like one big mining district. And that's what they've been doing. I mean, they've been mining for generations. They're very good miners. I like the companies. And I just think that historically, Aussie companies have been expensive. And right now, on the Aussie 8, there's only 2 of them. There's 2 of them that have gotten pricey. I'm not surprised. But 6 of them are still cheap. And it won't be long before all 8 are pricey. So there's that. And then the other place that I like to chase alpha, which I think is really opportunity, this is probably the best part of my speech here. This is the one that should really get your eyes lit up, is the development plays. The development plays are really, really cheap right now. And they're not going to stay cheap. And what I saw from 2004 to 2007 when I first got into this was the development plays were just going nuts. And the reason why is because the producers go first, and then once the producers once they double in price, the big alpha on the producers is gone. Any quality producer once it doubles, the big alpha is gone. So the only big alpha that's left is the development plays and your exploration plays. And the exploration plays have much more risk than developers, and when you go on a risk-reward basis. And the developers, that's really, for me, now that I own a lot of producers, now the sweet spot for me is the developers right now, and it could be for you as well. And I'll just give you one example. Rubicon Minerals. Rubicon Minerals had a deposit of 2 million ounces, and they had a few good drill holes. It had a market cap of $2 billion. We don't see that today at all. There's no company out there that's even close to that kind of valuation, but we're going to. So you can take that Rubicon story and you can apply it to a lot of the developers today. I'll just give one, Stellar. Stellar's got 18 million ounces of gold in Canada, has a market cap of $150 million. It's the total opposite of Rubicon. It's like, what the heck's going on? And there's a lot of them. A lot of these development stories out there. There's Thesis, there's the Revival.
What about Next Gold? We like
Next Gold, love Next Gold. And 3 million ounce projects. There's a ton of them. Lahontan, Silver Tiger, bunch of them. I mean, you got 20. There's probably 20 of these development plays that are just uber cheap, that are going to just have massive moves, I believe, once this market takes off. Because again, I just used that Rubicon. I just remembered what Rubicon did. It's like when people start liking these stocks, they get really overvalued. Like Rubicon got really overvalued. But we're going to see that. But the one key here is their development. And that's what people are going to get really excited about. They won't get excited about explorers per se. Explorers are really they're basically a very niche. Only a few of the explorers are going to do really well in this market. Very few. You got to be very, very selective. And they're not slam dunks, if you will, except for the optionality plays like Banyan and Free Gold Ventures and Tudor. Banyan's been ripping. People have found Banyan. I've been talking about Banyan since it was valued at $8, and now it's up valued over 20. It's really ripping. And Free Gold has been moving too, but not as much as Banyan. Tudor. People think Tudor's a very hard mine, difficult mine, and so it hasn't been moving. But those are the three optionalities that I really like in the gold sector. So I'll stop there. We got 1 minute. I only left you 1 minute, John.
That's all right. So we both like U.S. Gold, USAU. We've met with them. I went on a site visit there 2 years ago. They were in Wyoming. They're fully permitted. They check a lot of boxes for us. George B. is a mine builder by trade. So, I think the analysts are way off on that. I see some $14, $15 price targets trading at like $12.70 right now. It's like, come on, guys, get some guts. What's the other one that we just forgot there? Aftermath Silver. We just interviewed Michael about 6 months ago, around 35 cents, trading at 60 cents now. They have a ton of manganese. They have a ton of silver, about 140 million ounces of silver in the ground. That's AAGFF, AAG in Canada. And we have, Vizsla, yeah, of course, they've run up nicely. But we really appreciate you guys giving us the floor here for a little bit, and we hope you learned a little bit. And our websites are fenneckconsulting.com for me and goldstockdata.com for Don. Thank you.